Mr. Holzmann, thank you so much for your time. I really appreciate it. Uncertainty seems to be the name of the game these days. Of course, it also pertains to the lack of information that you have for your monetary policy decisions. Can you characterize the nature of uncertainty right now? Is it the highest it's ever been for you?
Uncertainty is definitely the game in town nowadays. We have not seen this uncertainty now for years, if not to decades. So unless the uncertainty subsides by the right decisions, we will have to hold back a number of our decisions, and hence we don't know yet in what direction monetary policy should be best moved.
Yet at the same time, the ECB Governing Council voted in favor of a cut last week, and you were pretty cautious about that. You said the ECB should wait until you have more data. Can I ask you whether the consensus is fraying when it comes to monetary policy?
I think there's a broad consensus, but of course at the margin people differ, and my assessment is that at this time it wasn't clear yet to what extent countermeasures were being taken, because with countermeasures in Europe, prices may have increased. Without countermeasures, quite likely the price pressure is downward, and for the time being we don't know yet the direction.
Mm-hmm. Your colleague from Korea, the central bank governor of Korea, who I spoke to yesterday, told me that with regards to monetary policy, they were in a dark tunnel and they didn't quite know where there was the light at the end of the tunnel. Do you know which direction we're going?
I think if and as the recent noises about an arrangement were to be true, in this case quite likely it is more towards the downside or the upside with regard to the prices. But this can be changed by different decisions, and the result of it we may even imagine in other direction. For the time being, no, it will be down.
Mm-hmm. You've said before that, again, there's so much uncertainty around the data that's coming in. What kind of data do you want to wait for? We get PMIs this week, we get hard data, of course, with a lag. What kind of data are you looking for to confirm and to best inform your decision as when it comes to further cuts?
I think before looking at this data in detail, the question is what kind of political decisions will be taken. Is it that we will have some tariff increases? Is it that we will have strong tariff increases? That we will have retribution by high counter tariffs? This is the direction to do. And then of course this high uncertainty what we currently have you can find everywhere. You can find it at the level of growth. You find it at the level of changes in the financial markets indicators there. So at the moment we look at everything and try to make sense out of it. But for the time being, it's too early to say this is the data to look at. We need the decisions.
Mm-hmm. The market is currently pricing in roughly 2 more cuts this year by the ECB. Is the market roughly right on that?
As you know, looking towards the future is always a little bit of guessing. Maybe 2, maybe 3, maybe 1. We don't know yet, but there may be further cuts this year, but the number is still outstanding.
One of your colleagues on the Governing Council argued that rates would have to fall below the neutral rate to help out the Eurozone economy. Are you in favor of that?
Well, I have to say I'm not in favor of making this kind of announcements now. I'm in favor of waiting until we have the data, because I can also imagine a different scenario in which we may have to increase rates again towards the end. So I'm cautious to make this kind of announcement.
Mm-hmm, absolutely. When it comes to the level of the euro, it has obviously strengthened quite a bit against the dollar. It has given you more breathing room in terms of cutting. Also, weaker commodity prices are helping out. On top of that, cheap imports from China, definitely some deflationary pressures here. The breathing room that you're given, how much comfort does that give you?
Well, it's not only that we have this kind of breathing room, but also it is that if and as we value the euro, also our exports become more difficult. And as we have a problem with our growth, it's uncertain how much the growth will be negatively impacted, compared to having the elements you mentioned.
Mm-hmm. In other words, are you saying the level of the euro is a bit too strong for your liking when it comes to the competitiveness and the export strength of the European economy?
Where the euro currently is, it's more or less the level when the euro was created, it was 1.7, we're close by. So at the moment, we're back to our historical standards. And that's also where we have been historically at this level there. So yes, sir, higher euro is better for exporting, but on the other hand, we can import price stability, and so there's a trade-off to be made.
Here in Washington, there have been repeated attacks on your colleague in the U.S., Jay Powell. And the message from Christine Lagarde, the president of the ECB, has been to lend her support to Jay Powell. Can I ask you, these repeated attacks, do they strengthen the resolve of any central banker around the world? What is your message to him?
Well, what we know, and this is very, very strong empirical evidence, is that independence of a central bank is crucial for economic development. I have never seen a country in which a central bank which is not independent to perform well. So if one wants to have a strong economy, one needs a strong independent bank.
Finally, I want to talk to you about the big spending spree on defense in Europe that's currently underway and that is being planned. There have been some discussions around the ECB's role in it, given that the ECB has been involved in major central bank purchases of bonds in the past. Should it get involved this time around?
We have not discussed yet at the Council. As a result of it, I cannot pronounce myself on that. But as always, as a central banker, one is very careful when it amounts to financing public debt, and this also includes this occasion.
It is a huge opportunity for Europe, though, isn't it? Will the positive impact of the defense spending, will that offset the potential inflationary impact, you think?
Potentially, yes, but it depends how it is done. Only spending money on defense in the current way will be helpful, not so much. What it needs to be done is to spend the money wisely. This means that we may have to reduce our number of tanks from 14 or 20 to a few and not keep it as it is. So organizing the defense production and decisions early on will be crucial because you get much more bang for the buck.
Are you worried about the rising debt levels and the maybe financial stability risks associated to that?
Not yet, because the amounts are by themselves still relatively limited despite all this amount there. But definitely, as always, public debt is something which makes central bankers nervous, and the higher they are, the more nervous we get.
A final question here on the overall European competitiveness. One could argue the ECB has done everything it can, 7 cuts this cycle. We'll see where you go for the rest of the year. But now it seems the tenor is it's over to you. It's over to the European nations and to the European businesses to deal with that new environment they're in. Is that your message to Europe?
I think this would be a quite good message to give. To say we are not the only show in town. We need to have the public sector. We need policies there in order to re-erect the growth. It can't be done by monetary policy.
Mr. Holzmann, thank you for your time. I appreciate it.
My pleasure.
Thank you.